This is the Southside School of Financial Freedom Watch List and Market Report for the week ending January 1st, 2022. Our question this week is, how well or poorly did the Southside Portfolio do against SPY? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average decreased minus 0.16% on Friday, but was up 1.08% for the week. The S&P 500 decreased minus 0.26% on Friday, but was up 0.85% for the week. The Nasdaq decreased minus 0.61% on Friday and was down minus 0.05% for the week. Looking at the week, we can see that there were 6 up finishes versus 9 down finishes for the major indexes. On Monday, all the major indexes ended up. On Tuesday, the Dow Jones Industrial Average ended up, while the S&P 500 and the Nasdaq ended down. On Wednesday, the Dow Jones Industrial Average and the S&P 500 ended up, while the Nasdaq ended down again. On Thursday and Friday, all the major indexes ended down. The new unemployment claims were 198,000, which was less than expected. Holiday sales jumped 8.5%. U.S. home prices surged 18.5% in October. The U.S. 10-year Treasury yield dipped but held to about 1.5%. Cryptocurrency prices, including Bitcoin, fell in the month of December, and the S&P 500 gained about 27% for the year. New unemployment claims, holiday sales increases, U.S. home prices, changes in the U.S. 10-year Treasury yield, cryptocurrency prices falling, and the S&P 500 getting record gains for the year are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. How well or poorly did the Southside Portfolio do against SPY? The S&P 500 trounced the Southside Portfolio. As stated earlier, the S&P 500 gained nearly 27% in 2021, which is more than 150% greater than its average gains of about 10% per year. It was a stellar year for the stock market, especially the S&P 500, which comprises the biggest companies traded in the U.S. stock market. If you would have bought SPY at the beginning of the year and did absolutely nothing else, SPY would have increased 27.04%. That is, if you would have invested $10,000 in SPY, it would have become $12,704. If you only had $1,000 or you only wanted to risk $1,000 at the beginning of the year and bought SPY, it would now be $1,270.04. And if you had $100,000 you wanted to put in SPY at the beginning of the year, that $100,000 would now be $127,040. Meanwhile, the Southside Portfolio lost in value. Thus, the Southside Portfolio was beaten badly by the S&P 500, as were other funds. Most, that is, about 97% of professional fund managers do not beat the S&P 500 over a 10-year period. This is something that I say every week. It is extremely difficult to beat the S&P 500. Whenever someone tries to give you advice on their stock system, ask them whether their system consistently outperforms the S&P 500 and ask for receipts. That means ask for proof. The Southside Portfolio beat the S&P 500 in 2020, but was trounced by the S&P 500 in 2021. However, the Southside Portfolio is designed to generate cash flow, that is, generate income. Here is a breakdown of the Southside monthly cash flow. Notice earlier in the year, the Southside Portfolio was generating a lot of cash flow every month. That cash flow started to decrease as the Southside started purchasing more and more Bitcoin. And again, Bitcoin is not used to generate cash flow. The Southside Portfolio uses stocks to generate cash flow. The Southside generated $60,560.10 of cash flow, and only $836.50 of that was in dividends. While the portfolio may lose value, it still generates cash flow. Just as a rental property may lose value, but it still generates income as long as you have someone renting the property. The Southside uses the cash flow, that is, it uses the income to purchase more stocks, options, and Bitcoin. $28,000 was distributed, that is, taken out for my living expenses. Do you earn $60,560.10 per year? Perhaps you earn more. How do you earn your living? Do you have a job? What did you have to do to earn your living? Can you live on $28,000 per year? Or would $28,000, or better yet, $60,560.10 be a nice addition to your other income streams? Do you know how to generate cash flow or income from the stock market? If so, has your portfolio produced more than $60,500 in cash flow? Do you own any stocks at all? If not, why not? Is it because you don't understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is, read, save, and invest. Former school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and other books like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside's trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list for the week ending January 1st, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Van Eck Gold Miners ETF, ticker symbol GDX in the third column. It increased 2.33% for the week, and it was up 0.79% on Friday. GDX is an exchange-traded fund that seeks to match as closely as possible the price and yield performance of MX Gold Miners Index. The fund utilizes a passive or indexing investment approach. Looking at a summary of results, you can see that GDX has decreased just over minus 11% year to date, that is 2021. I do not own GDX, but I have used GDX in the past to generate cash flow. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio, as stated earlier, did not outperform the S&P 500 index ETF SPY. The Southside Portfolio was down minus 12.91% versus 27.04% up for SPY, a difference of 39.95%. The Southside lost to SPY by almost 40%. The primary reason the portfolio lost is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit earlier this year, just when the portfolio started buying Bitcoin. And as stated earlier, Bitcoin dropped in December. Bitcoin is in a bear market. Will it rise in 2022? Stay tuned to find out what happens to Bitcoin and the Southside portfolio, which will remain heavily invested in Bitcoin. The portfolio is 81.63% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 17.38% of the portfolio. Cash is 0.99% of the portfolio. The cash flow generated for this week was 0.36% of the portfolio account value. The account value changed by minus 11.97%. Meanwhile, the S&P 500 ETF SPY changed by 0.93%. I sold option contracts on one position this week. It was a call that ranged from 0.00 to $380.40. You can get more details, including total dollar amount of cash flow for the week, on the website SouthsideSchoolOfFinancialFreedom.com. Check out past videos for other questions of the week. These videos are listed in the description section. Please like, share, and subscribe.